Hello guys, in today's video, I'll be diving deeper into internal structure, being specific, structure inside structure. I'll be using this pair, that is British Pound US Dollar, one of the pair I would recommend any beginner trying to learn True SMC. And so without further ado then, let's get right into the video. Okay, so this is a naked chart, nothing is marked here. We can clearly see that this here is the inducement. So after price has taken out the inducement, we can clearly see price is reversing back. That is making a break past this low, exactly right there. And we know once such a pattern has formed, then this here is of course a break of structure to the downside, that is. So this here becomes our impulsive leg, and that's where we mark the inducement again, of course. So we have our minor inducement exactly right there. So price has taken out the inducement, and after taking out the inducement, it mitigated as well this extreme order block exactly right there. And after the mitigation, we can clearly see price reversed back all the way, making a break past this low exactly right there. Again, a bearish break of structure, and as well a new trading range. So the new trading range, of course, the high will be this one here, and the low, it is of no doubt that it is this one here. And price is currently inside this range. As we can clearly see, price has already taken out the inducement. I mean this one here. So price has already taken out the inducement. And of course, if I am to mark the POIs in this case, of course, I will start with the order flows. Okay, so let me just focus with this. Focus with this dealing range. This is the high, this is the low, and of course the order flow starting from the extreme, we can clearly see that this order flow is mitigated. So we can clearly see that, and the one that, okay, so let me use this color symbolizing a mitigated order flow or an invalid order flow. And of course we can clearly see this other one here also mitigated, and the one that comes after that is this one here, and this is not mitigated, or it wasn't mitigated on that impulsive leg, and so meaning its mitigation was on this corrective leg. I mean, after price has taken out the inducement, the mitigation is by the corrective leg. So this is of course the extreme order flow, so it's a valid order flow in that case. And of course the POI that will be valid above it, it will be of course the origin order block. It should be located on the extreme of the dealing range. Okay, so let me get rid of this. So right now we have the extreme order flow. Okay, should I do this? Okay, so we have the extreme order flow, and of course the origin order block. This is of course the engineering liquidity. So we have our engineering liquidity exactly right there. So ENGLQD. And of course this here is our inducement. Okay, so what's next? Yeah, I can clearly see that I have marked all the valid POIs and core liquidity levels available on the dealing range, and right now is just knowing where price will be reversing from. Actually, price is reversing after the mitigation of a valid POI, and this means there's a high possibility that price will continue all the way towards this external liquidity. Okay, so let me mark these swing points. So we can clearly see, like visibly see. Okay, so let me mark this here. This is the extreme bearish order block. So we can visibly see that this is a downtrend. So you can clearly see the high. Okay, bear swing point. We can clearly see that this here is the lower low, this here is the lower high, this here is the lower low, this one here is the lower high, and of course this here is the lower low. Okay, so right now let's shift our focus on the dealing range exactly right here. And if I am to mark the internal structure here, we can clearly see that starting from below here, price has been making break of structures, a break of structure of valid pullbacks, that is bullish break of structure. So we can clearly see a break, another break here, and of course we can clearly see the breaks continue. So we can clearly see another break there until price takes the low of this pullback and makes a break past this high. So we can clearly see that. So we all know this pattern. Once price takes a low and heads higher, making a break past the retracement that takes that recently formed valid pullback low, then in that case, that's a break of structure. And we can clearly see, if I continue here, we can clearly see that price takes out this valid pullback. And of course, we can clearly see the order block that price left here. And yeah, so this is a bullish order block. So we can clearly see that we have a break of structure, actually a weekly break of structure inside the weekly one. So I mean the major one, that is. So we have the inducement exactly right there. And after price has taken out the inducement and made a break of structure, of course, the other thing is price taking out again the inducement. So there we have it. Price taking out the inducement and mitigating the extreme order block. So we have there our extreme bullish order block. And of course, this one here is our high. So in this case, which structure will price actually respect? So let's get back here. We can clearly see that price has been making valid breaks, or valid pullbacks until here that price takes the low, meaning an inducement in that case, then makes a break of structure, takes the inducement, mitigates the extreme order block. So now this is actually internal structure. And by the way, I am taking the fact that a higher time frame valid pullback is often a lower time frame complete structure. So this means that these breaks of these valid pullbacks is actually a valid break of structure of the lower time frame. So this is the weekly, so the lower time frame will be the 4 hour. So this is a 4 hour break of structure, 4 hour break of structure, a 4 hour break of structure until price makes a change of character here on the 4 hour, of which now it will be the inducement on the higher time frame. And after taking out the inducement, you can clearly see price makes a break past that. And we know once such a pattern is formed, then in that case we have just created a complete structure on the current time frame, of which it is actually the weekly. So we have a break of structure there, and of course after the break of structure we usually wait for the inducement takeout and a mitigation of a valid POI before we participate for that entry. So price here has mitigated the extreme order flow, and right here on the internal structure price has mitigated the extreme order block. So in this case, which one or which POI will it hold? So I know someone else right here will take the buy from this area right after seeing this beautiful reversal pattern there, a clear directional shift, placing their stop loss below there, and of course they'll be targeting this high exactly right here. But in this case, they'll be wrong because the internal structure is deemed necessary when price mitigates the major structure POI or takes out a core liquidity level. So in this case, this POI, this extreme order block of the internal structure will not hold in this case, and we'll be looking forward for this extreme order block to hold. So this means that this trade is logically incorrect, as we are looking forward to take a sell after price mitigates that, somewhere here. So after price mitigates something somewhere here, we'll be looking forward to take that sell all the way towards the external liquidity, that is this area here. Okay, so if I continue running price, so let me make this fast, we can clearly see that okay, so exactly right here, we can clearly see after running price failed this area and respected the internal structure. So in this case, this means that price is looking forward for additional buy side liquidity, probably mitigate the next reversal area before making that ultimate sell all the way towards the external liquidity. So exactly right here, the next reversal area or the next valid POI is the origin order block, and all of this is actually buy side liquidity. We all know at every valid pullback high there is some liquidity resting above there, and of course that liquidity is buy side liquidity. So this is the accumulation of the buy side liquidity, and upon seeing price failing the extreme order block, then this means price has yet accumulated enough liquidity to move price all the way towards the external liquidity. So price is heading higher to take this buy side liquidity, mitigate a valid reversal area before making that ultimate reversal all the way towards the external liquidity. We all know once the origin order block fails, then price will have made a change of character in this time frame. Okay, so right here we can clearly see instead price respected this this internal structure, and upon seeing this POI failing, then this means we can continue buying based on the internal structure all the way to the next reversal area or reversal level if there is a core liquidity level above. But in this case, we only have the origin order block. Okay, so right here on the internal structure, then we can clearly see that this one here is the low, and of course with no doubt this here is a break of structure. So exactly right there we have our inducement being this one, in this case minor inducement. And if I continue running price, of course price creates another valid pullback here. So of course, I shift to the recent one and price takes that inducement. We can clearly see that. So after price has taken out that, then I can actually mark the valid areas here to take the entry from. And we can clearly see the decisional order block here. In this case, all the order flows are mitigated. That's the reason as to why I'm not marking the order blocks, the order flows, because all the order flows in this case are mitigated. This is the decisional order block, as it is the order block that caused the break of structure. This one here is of course the rejection block. So exactly right there we have the rejection block. Okay, so we have the rejection block, and here if I am to check for the extreme order block, you can clearly see this is mitigated, and so this remains to be the one. Yep, so exactly right there we have our extreme bullish order block. And of course the engineering liquidity will be this one here. Yep, so now let me continue running price, and we can clearly see price has, okay, so price spiked through the decision order block. So the decision order block failed exactly right there. So this is the extreme order block. So let me continue running price. Okay, so price has made that reaction from the extreme order block. So this means you can actually take the entry after seeing that reversal pattern, or you can go to the lower time frame for that lower time frame execution. Of course, your stop loss should be placed here for a good RR, but this here is the safest part to place your stop loss. Below here. But of course, if you do that, you'll have an unfavorable risk to reward, and so it will be making sense to place your stop loss there. And if it fails, of course, you'll be looking forward for the rejection block again, and you take another entry. Okay, so unfortunately we can clearly see it failed, and price came to the rejection block here, and you can clearly see that beautiful morning star pattern there. Continuing to run price, you can clearly see exactly right there that I can take the entry, stop loss of course some few pips below there, and of course I'll be targeting that external liquidity for a good RR to 2.2 that is. And you can clearly see after I continue running price is heading onto my favor, and eventually we can clearly see price achieved it to the external liquidity exactly right there. So this means that now we can take another buy, because we have yet achieved to that point. We have yet achieved to that reversal area, of which it is this here. So this means I can continue buying all the way to that area. Okay, so that's a trade hit TP. And again, here we can clearly see price has, okay, so you can clearly see a break of structure. This one here is now our new low, and of course this here is the inducement right here. Okay, so let me continue running price until price takes out the inducement. Price creates another valid pullback up here, so I shift to the previous, to the recent one. So you can clearly see there, that's the inducement. Price has taken out the inducement, as you can clearly see. This here is a weak order block. Why a weak order block? It was created after the break of structure. So this means I am not interested for, I'm not using it as a reliable reversal area. So in that case, I should only be focused with the decisional order block in that case. So we have our decisional bullish order block there, and as well we have our extreme order block down below here. Yep, so this one here is the engineering liquidity somewhere there. So this is the extreme. So you can clearly see the extreme bullish. And of course, if I continue running price, we can clearly see that price has yet mitigated the decisional. So I'm not interested. Okay, so continuing running price, price now has mitigated the decisional, and you can clearly see all of those pin bars. Okay, so after seeing such, of course, your entry should be exactly right there, stop loss. It will be making sense to place it here rather than placing it safe only to give you a negative risk to reward. And of course, you'll be targeting somewhere above there for a reasonable risk to reward. And of course, if I continue running price, we can clearly see that price eventually made it to the external liquidity exactly right there. And of course, the process of buying continues all the way till this area. So we can clearly see this is, of course, the break of structure. And of course, this is our new low. If I take the fib, drag it from this low all the way to this high, we can clearly see that this retracement is deep enough, so I have no any doubt to confirm this as a valid break of structure. So price has made a break of structure. I know it's a break by a week, but as I usually say, a break by a week is a valid break of structure. So then we have there our inducement, in this case minor inducement. So exactly right there we have our minor inducement. Price has, okay, so there's the minor inducement, and of course I can clearly see where the extreme is. It's actually here, and of course it's overlapping with the rejection block, of which it is exactly right here. So there we have it, our rejection block. So we have the rejection block and we have the extreme order block. The extreme bullish order block. This here is the inducement, in that case minor inducement. Our low then will become our major inducement. So let's see. Okay, so if I continue running price, you can clearly see that price has taken out the inducement exactly right here and mitigated the extreme order block. And if I continue running price, you can clearly see that price is dipping down. Yeah, so you can clearly see still inside the extreme order block, probably mitigated the refined one on the lower time frame. And after seeing that bullish, after seeing this strong bullish candle there, then of course there will be the entry, stop loss below here, and of course you'll be targeting this high. It will give you a very small risk to reward. So I would rather take the entry from this scope down below here. And if I continue running price, you can clearly see price eventually mitigated that area, but now we are actually here, and this is a weekend, so price is yet moving right now. So price has actually mitigated that. You can clearly see that scope, of which it is this candle here, the one associated with a fair value gap and the one on the extreme. And I'm anticipating that this may continue all the way towards this area above here, of which it is our next reversal area, and the price will have achieved what it wanted, that is taking that buy side liquidity, grabbing sufficient buy side liquidity, mitigating that reversal area, and eventually making that ultimate move, ultimate reversal all the way towards this external liquidity down below here. So that is of course trading trading counter trend, and it's just that easier. So guys, that is what I wanted to cover in today's video. So I believe you have learned something. Do me a favor as well, drop a like, and of course I'll be happy seeing you in the next video. Peace.